Welcome to the FedLife podcast with Dan Sipe from Serving Those Who Serve. In this podcast, Dan draws from years of financial experience to help federal employees overcome challenges that every Fed can relate to. Join us for this journey as we reach, teach, and serve to help you make the right financial decisions. Now, on to the show.
Hello and welcome to this edition of the FedLife podcast. I am, as always, your host, Dan Sipe. Additionally, I'm the branch manager here at Sipe and Associates and Serving Those Who Serve. I know I did it last go-round. It was wrong, but I liked it so much, I'm doing it again. Happy New Year. I know I just broke the space-time continuum in the third wall, and now the whole world's going to spin off axis because I broke the rule of podcasting. But we are excited to kick off another year with you folks, and I'm going to begin, as I always do, with saying thank you. Thank you for your service. Thank you for your service to our country. Thank you for our service to every single person in the United States. You truly are the glue that holds the thing together. You are why we do what we do. So you do not hear those thanks enough. You'll always hear it here. We are back, continuing remotely for the safety of everybody. But we are back with Ed Zurndorfer, the incomparable one, the guru, as part of a mission to reach, teach, and serve you. And as I'm always required to say at the outset, the opinions of our guest Ed Zurndorfer are not the opinions of Raymond James of Serving Those Who Serve. This podcast is presented for information only and is not intended to be taken as advice. All listeners should consult their personal advisors before taking any action. And if you don't have a personal advisor, hit us up at Serving Those Who Serve. We're here to help you. So if you are a regular listener, you know that we sort of double cover things to give you multiple ways to take the information that you might need. So Ed routinely writes for us in the Fed Zone. You can find that at fed-zone.com or blog.swserve.com. And so then we cover those in the podcast, have a little fun with it. So for this one, we begin with some tax information from Ed. And I always like to touch on this because if you're new to the podcast, and we have new people coming on, that's fantastic. Please, folks, continue to share this. Ed, in addition to being one of, for compliance purposes, I have to say one of the top authorities on federal benefits. I don't know of anybody better. He is also an enrolled agent with the IRS. So that means he's pretty savvy about tax stuff. He has a tax practice, so we're kicking off talking taxes. So Ed, your first FedZone article cautions folks who may owe significant taxes on their 2020 income might be well advised to make an estimated tax payment. Would you walk us through how that might happen for somebody?
Yes, Dan. Very, very happy to. Dan, as you mentioned, I'm an enrolled agent with IRS, and I also have an accounting and tax practice in addition to consulting on federal employee benefits and doing webinars, seminars. So a good part of my time is spent dealing with clients when it comes to their taxes. And typically this is what happens when I prepare an individual's taxes. They'll say to me in March or April, "Thank you very much. I guess I'll see you next spring." Wait a minute. Yes, we are done for the previous year. But this is what I tell each one of my clients. If something happens during the year that's going to cause a significant tax liability, your federal taxes or state income taxes might significantly increase. Example, you happen to sell some stock or some bonds or some mutual funds, you sold some real estate, and you, thank God, incurred a big gain, a large capital gain. Well, you have to pay tax on that gain. And the person will butt is, well, yeah, I know I have to pay taxes, but I'll pay it next April. I said, wait a minute, no. The IRS and the state revenue departments don't want to wait to the very end to get paid. They want to get paid during the quarter in which you incurred the gain. They don't want to wait. It's just like a store owner. If you walk into a store and say, I'd like to buy this, and this to the store owner, and the store owner says, this is available for sale, you can't say to the store owner, I wish I had the money right now to pay for it, but I will have it by the end of December. can I pay you then? I don't think many store owners were very happy about that. Well, the IRS and the state revenue departments are the same way. They want to get paid when there's a significant tax event. Let me give you an example. And this happens, and it probably did happen during the year 2020 because after March the stock market went up and a lot of people sold some. This is outside of a retirement account. They sold some stocks and or stock mutual funds, and they came across a nice amount of money through, and it was all taxable because they incurred a capital gain. Or they sold some real estate. Real estate had a very good year in 2020. People sold their houses, sold their vacation homes, and as a result, they owed tax on that. Well, if they sold their house, let's say they sold their vacation home in August, and they had a $100,000 gain. I'm just taking an example, $100,000 gain. Person said, well, now I can sit on this nice amount of money I got, and I don't have to worry about paying taxes till next April. No, you have to pay tax in September. Why September? Because the third quarter, IRS, the third quarter of the year starts on June 1st and ends on August 31st, and if you incurred a significant gain, some type of capital gain during that quarter, you owe taxes that in reality are due by September 15th. That's the third quarter estimated tax deadline. And the person says, why? Well, because that's the IRS wants to get their money earlier than later. And if you don't pay, and if you owe a lot come next April, there's going to be what's called an under withholding penalty. You didn't have enough tax withheld from your paycheck. So that would be a reason that you have to pay the tax, the tax due, or most of it, I should say, by the September 15th. And the same thing would happen if you incurred a gain during the first quarter of the year. You have to owe estimated taxes by April 15th. The first quarter, the second quarter ends on May 31st. You have to pay June 15th, and finally, at the end of the year, December 31st, if you incurred a big capital gain in the last quarter of the year, you owe taxes by January 15th. So in my column that I wrote in the beginning of January, I said, look back this year and see when did you incur any type of significant gains, capital gains in your stock portfolio, or sold some real estate. Because if you have a significant liability due, and how does the IRS define a significant liability? You owe more than $1,000. Come next April, if you owe more than $1,000, you could be subject to what's called an under withholding penalty. So the way you get around that is to pay earlier than later. That is, in this case here, at the end of the fourth quarter, by January 15th. Now, it is after January 15th as we speak right now, or a few days after. So the person who's thinking right now, see, I missed the deadline. I guess I only can't pay any estimated tax. Not true. It's better to pay late. Today is what, January the 20th? It's better to pay now than to, and you might incur what's called a little bit of an interest penalty because you paid late. But that interest penalty you're going to pay is going to be a lot cheaper than the under withholding penalty you could be subject to if you waited till April 15th, the filing deadline, to pay what's due.
Gotcha.
So in a nutshell, that's why people have to pay estimated taxes. And again, I repeat, if you didn't pay your estimated taxes at any time during 2020, whether it was the first, second, third, or fourth quarter, you should pay it now as soon as possible. Do not wait till April 15th.
Yep, it does not get better by waiting. Okay, so that's great information. So folks, if you had those gains, congratulations. Condolences if they're over $5,000-$6,000 and you need to make that payment. So Ed, let's press on. So your next article has a bit of information that may not leap to mind for most folks, and it's advising them while they're gathering their documents for 2020 filing for their taxes, they should take time to check their Social Security statement, which is also known as a Personal Earnings and Benefit Estimate Statement, or PEBES.
The PEBES. They're calling the PEBES.
PEBES, love it. And so tell us why. Why should we check that?
There are a couple reasons here. I have to tell you, Dan, there's been some change in the law. When I was in mid-career, let's say when I was working for the federal government back in the, 90s and let's say late 80s or 90s, we used to get Social Security statements every year.
Oh, I remember.
Then Social Security started cutting them back a little bit every 5 years. You would get a Social Security statement. And now what would be on that statement? It would tell you what your calculated Social Security, retirement, and disability benefits would be in today's dollars based on your earnings history. Mm-hmm. That statement would show you what dollar amount you would get at age 62 or your full retirement age or age 70. If you got disabled, they would tell you your disability benefits that you earned so far that you had earned as a result of your Social Security wages. It would tell you any family benefits that, like for children, for spouses, any death benefits. It would tell you if you're eligible for Medicare. Very important information, and it would be updated every year because as you continue to pay into Social Security, your benefits would go up because you were paying the Social Security taxes and the Medicare taxes, so therefore your benefits would increase over time. And it was very, very, it's very curious to see how your benefits go up over time. As I mentioned also, that those benefits were calculated based on your earnings history. If you've paid into Social Security during the year, and most of us have, if you're a FERS employee, you certainly have. If you're a FERS offset employee, you have. If you work in private industry, I think, Dan, you work in private industry.
I do indeed.
You pay Social Security taxes.
I do indeed.
So a copy of your W-2 that everybody's going to be receiving this month, a copy of your W-2 wages if you work during 2020, shows your Social Security, what's called your Social Security earnings. It's box number 3 on your W-2.
Yep.
That is reported to the Social Security Administration so that this year Social Security Administration can recalculate your benefits. By the way, if you're self-employed, like myself, I'm self-employed. When you file your taxes, you file Schedule SE, self-employment, and a copy of your self-employment earnings.
Yep.
goes to the Social Security Administration. Now, a copy on page 3 of your PEBES shows you a history of your Social Security earnings. It's very important that individuals check those statements every year. I'll tell you here in a second how to get those statements. But here's the point. The reason you need to check it is, number one, is it's very interesting how the benefits go up over time, and they do. They never decrease; they go up over time. But on page 3 shows the earnings history, and like they say, junk in, junk out. If the earnings history is wrong, your benefits are going to be wrong. So as a rule, individuals should check their statements not only in January, but also, let's say around July, August, because by that time, the Social Security Administration has received a copy of your W-2, again, box number 3, Social Security earnings. And it really is important that you make sure that what has been reported is correct. Because occasionally employers make mistakes, maybe Social Security makes mistakes entering the information, and you should confirm the information there that is correct. And there's some other interesting information on the W-2 as well. I should say on the PEBES statement, on the PEBES, the personal employee benefits earnings statement that individuals should take a look at, which we'll get in here in a few moments. I mentioned that how do you get your statements? Well, as I mentioned, they used to mail them out, but I don't know how your mail is, but my mail is not very good. A lot of the stock. A better way of doing this is to go online and set up your own Social Security account.
Yep.
It's free, it's safe, it's reliable, it's great. How do you do that? You go to www.fedlife, socialsecurity.gov, www.socialsecurity.gov/my account. That's MYACCOUNT. Set up your own account with a password, and this way you can look at your statements 24 hours a day, 7 days a week. You can check your earnings history 24 hours, 7 days a week, and enjoy. That's my opinion. That's my feeling.
And I couldn't agree with you more, Ed, because even an old gray beard like me was able to set it up pretty easy. So it's pretty user friendly. The one tip that I will throw in on that is they're going to make sure you're you. So probably a good idea if you don't have a lot of stuff, in books or things like that about where you've lived, what sort of accounts you've opened, that sort of thing. Not a bad idea to pull that together before you do it, because they're going to make sure you're you, and they are going to ask some multiple choice questions. Certain ones in there, the right answer will be something from your history. So take a moment, maybe download a credit report, something like that, and it'll put you in pretty good stead for that. So, Ed, let's jump back to the PEBES statement. Let's walk us through, because page 2 has some pretty important stuff on it. So why don't you touch on what people will find
page
there?
Page 2 is where is listed your benefits information. I'm gonna run through it here. With specifically on page 2. It gives you an estimate of your anticipated retirement benefit. I should say that the first line on page 2 is your calculated what's called your primary insurance amount, the PIA, which is the fulcrum of your benefits. Everything you're going to receive is based on your primary insurance amount, which they recalculate every year. What the primary insurance amount, the formal definition is the amount of your monthly Social Security retirement benefit at your full retirement age. What is full retirement age? It's some age between 65 and 67, depending on what year you were born. If you were born generally before 1937, your full retirement age is 65. If you were born between 1943 and 1954, your full retirement age is 66. And we're adding 2 months now. So if you're born in 1955, your full retirement age is 66 years and 2 months. If you know anybody who was born in 1956, Dan, that person's full retirement age is 66 years and 4 months. Anybody born after 1959, anybody born after 1959 has a full retirement age of 67. 67. Then after the amount of your PIA amount, which is again your amount of your monthly benefit in today's dollars, your monthly retirement benefit age at your full retirement age, it shows the amount of your monthly benefit at age 70. Because some people wait until 70 to take their Social Security, and
I know someone who did.
Some people take Social Security as early as age 62, and that number is shown. Now, what is shown for age 70 and age 62 is a percentage of what the PIA is. Example: if you were born after 1959, you could take Social Security at age 62. But you would get only 30% of your PIA. 30%. If you waited, though, if you're born again after 1959, if you waited to age 70, then to start receiving your Social Security, you would get 124%. 24% more starting at age 70 compared to starting at age 67.
Gotcha.
So there's a decrease or an increase depending on when you start Social Security. It's your choice. You can start your Social Security anytime between age 62 and age 70. It's your choice, but depending on when you start will determine how much you're going to get as a function of your PIA.
Gotcha. And folks,
So that's that's. Go ahead.
I'll drop this in here real quick. Sorry to interrupt you there, Ed. Be sure to head over to the FedZone, fed-zone.com, because Ed always puts some great visuals in his articles. So remember, this is a combination thing. You're listening to it now. You may have the article in front of you, you may not. Be sure to grab that article because it's very, very, very helpful, and you're going to be able to see the statement as you go through it. So you touched on before.
Appreciate the plug for the thanks for the plug for the column.
Oh, of course,
because
brother.
It's very illustrative there, and I think people will get a lot more out of it. Our listeners will get a lot more out of it if they look at if they've never seen a statement. They should look at it to get a better appreciation of it.
And as you already touched on, you said page 3 is where that earnings history is going to be. So obviously, if you're looking through your earnings history and you see a blank somewhere and you know you worked, that's something that you should probably pay attention to, right?
That is correct, and I personally have a lot of blanks on page 3 because I'm a retiree of the federal government, and I was under the old system, the civil service retirement system, in which we did not pay into Social Security. So those are our listeners who are or who were employed under the civil service retirement system, CSRS, not SERS offset, but CSRS pure. You did not pay into Social Security, so those years that you were working only for the federal government under CSRS, you're going to see 0 under wages, Social Security wages.
Yep. Okay.
I just want to finish up one other thing about these listing the benefits. Also shown on the Social Security statement, page 2, under benefits at age 70 and age 62. Right below this are family benefits. Many individuals are not aware of the fact that if an individual is receiving Social Security retirement benefits, then other family members could get a percentage of that amount. I'll give you an example, Dan. Let's say there is a couple. One spouse is receiving his or her Social Security retirement benefit, is married, and the spouse has very little Social Security employment. Maybe this was a stay-at-home dad or mom, and they didn't pay much in Social Security, maybe did not pay into Social Security. Well, the spouse would be entitled to half of the receiving spouse's Social Security. So if spouse, let's say the higher earning spouse, call it spouse A, is getting, let's say, $2,000 a month, then the low earning or no earning Social Security spouse would get $1,000 a month.
Makes sense.
It goes on because if there happens to be a child at home under the age of 18, if one parent is receiving Social Security retirement benefit, then the child would get 50% of what the parent is receiving. Isn't that amazing? 50%. So the child has to be under the age of 18 now.
And also one of the things that I noticed that you worked into that article is a calculation for our listeners that'll show them when they get their money back from the taxes withheld. And
this is no matter who I tell this to is simply amazed, because here's how I always pose this question, because people complain to me, employees say, "Oh, gee, look at those Social Security taxes. Every pay date they're taking 6.2% out of my paycheck. That's the FICA tax. That's the Social Security tax." Well, your employer, in this case the federal government, if you're a federal employee, matches that. You're paying 6.2% of your wages into the Social Security Retirement Trust Fund, and so is your employer up to what is called the maximum wage base, which this year is $142,800. Anyhow, on page 3 under the Social Security earnings history, it gives you a figure of the total FICA taxes you have paid during your years of earnings paying into Social Security. And it also shows what your employers have paid. It also shows the Medicare Part A hospital insurance taxes. So I have an example of that in the column. and it showed the individual paid about almost a little less than $90,000 over their lifetime into FICA. This person's not retired yet, but so far they paid $90,000.
Yep.
And what I did was, given that amount of money that the employee put into Social Security, the total amount of FICA taxes, I looked at that per individual's anticipated monthly retirement benefit once he or she would reach their full retirement age. And to make a long story short, what I did was I took that annual retirement benefit at their full retirement age and divided it by the number of I took that annual retirement benefit and divided it into the number of the total amount of taxes that the FICA taxes the individual paid during their lifetime, to get an idea how long will it take that person to get their money back. How long will it take that person, once they start drawing their benefits, to get the amount of taxes they paid in once they start drawing benefits? Want to guess, Dan?
Since I already read it, I don't want to guess, so I'll just let you disclose it to the folks. But folks, you're going to be surprised. Go ahead, Ed. Tell them.
It takes on average 3 to 6 years. In my example, it was a little over 3 years.
Yep.
A little over 3 years.
Yep.
Here, you retire. Let's say you start drawing your Social Security at your full retirement age. By the time you reach age 70, 3 years into retirement and drawing Social Security, you would have gotten back all those taxes you paid in during your lifetime. That is amazing.
It is. That
is simply amazing.
It is indeed.
I just couldn't avoid doing that, Sam. I had to look at this.
No, that's fantastic. That's fantastic. That's why I appreciate you, brother, because you put that different spin on it. Folks, just to let you know, this is not the last time we're going to be talking Social Security. Our next podcast, we'll touch on it too, because I've learned if I do all taxes on one, y'all aren't going to tune in as much. But if I mix it in with some Social Security, then you're going to get your tax information along with the Social Security, because I've figured out the ones that you really want to listen to. We're going to keep giving them to you, but there are some important things that we want to make sure you have, and we want to get to you in as easy and enjoyable way as possible. So I'll give you a little heads up here. Over and above our next podcast that we'll do this, our ensuing podcast. Okay, and again, I know I'm not supposed to break the time-space continuum, but in this case, February of this year, we are going to follow a journey of epic proportions, and it is what happens when a guru goes through the Social Security filing and claiming process. So Ed is going to share that with us, and there's a lot of important information in there. And please keep this in mind, because we serve a lot of folks who work for the Social Security Administration. If we talk about a snag or hiccup in there, we're not bashing you folks. We love you. But I live in the real world, okay? And people are not perfect. And when you are doing a massive, massive, massive job and handling, literally millions of transactions, things can happen. What we want to do is make sure that the combination of Ed Zurndorfer and serving those who serve, that there are people that you can come to that can help you with that. So that's just a quick little primer there. We'll be back with more on that. Ed, you never fail. Whatever you bring up is always super valuable for our feds, and folks, gotta throw another plug Ed's way on this, because Ed has a Social Security webinar that goes up pretty much every month. He does it with Jennifer Meyer. They are fantastic. It's very enjoyable. You can learn at your own pace. You can take notes. You can ask questions, and this is going to help you. So they are free. And if you come to one and you don't think you have all the answers knocked out, then go ahead and register for the next one. We do not cap these things. So we don't say, hey, you already came to 2, you can't come to any more. Nope. We're going to have them there for you. So folks, tell your friends about these webinars. Go ahead, Ed. Sounds like you're going to say something.
I'd like to just follow up and make two plugs for what you just mentioned, Dan.
Absolutely.
The first one is our next Social Security webinar is tomorrow.
Okay.
So anybody listening now who would like to, I guess there's still time to register, right, Dan?
Well,
Get
yes.
on there and,
Now, by the time this is through compliance and up, that'll probably still be true, but it might be a different month. So we do them every month.
We have one every month on Social Security, but
Yeah.
I just like to say we really talk about all the different things you need to know about Social Security, including what your benefits are going to be, how they're calculated, how to apply, when to apply.
Yep.
It's very informative, and I really encourage people to, if they've never attended one of our Social Security webinars, please do so. It's really fact, what I call fact packed, and really you really get a lot of it. And as Dan mentioned, we always welcome questions, please.
Yep.
The other thing I want to mention, and this gets back to page 2 of the PEBES, is that on page 2 there is information about the 2 offsets that affect some federal employees. The windfall elimination provision and the government pension offset. These are 2 offsets. And this is because I was a CSRS employee, and I'm a CSRS annuitant. I am subject to those offsets, and that's exactly what I'll be talking about in our next in our webinar. We talk my experience of going through applying for Social Security, what to look out for, and I think especially those listeners who are CSRS or who were CSRS should this would be very, very informative. If you are a CSRS person and you have your 40 or more credits of Social Security, yes, you are eligible to receive Social Security because you have at least 40 credits. But when you look at your statement, your PEBES, don't get all excited because on page 2 there's an explanation about the WEP. And what they don't tell you about the WEP, which I really want to mention now, is that your benefits that are shown do not include the effect of the WEP. They do not. They Social Security calculate your benefits as if you're like any other type of employee. So don't get all excited when you see how much you're going to get, because you probably will not. And this is what we brought out next month when we talk about my experience going through and applying for Social Security.
Sounds great, brother. I say it every time, but I don't know how you keep up with all this stuff, but I'm glad you do it for the feds, and I'm glad you do it with us. Folks, that is a wrap. Ed will be back as we continue to work together to reach, teach, and serve you. We are serving this serve. Be sure to subscribe to this podcast on YouTube and Spotify. Share it with your friends. Share it with strangers. Share it with enemies. Just share it. Check us out on Twitter and LinkedIn. Don't forget those live webinars every week. Just head on over to stwserve.com. You'll see the red button. Click it. Going to take you right to the landing page. Virtual Ed is amazing. The guru will come to you. Be sure to read every month in the Fed Zone, and that's Fed-Zone, and also blog.stwserve.com. And so, for Ed, the crew at Serving the Serve, and me, Dan Sipe, good luck, Godspeed, and above all, I'll say it again, I'll say it until I'm not breathing. It's your Fed life. Make it a great one, because you deserve it. Stay well, everybody. We are out.
Thank you for listening to the FedLife Podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Serving Those Who Serve or Raymond James. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. Securities offered through Raymond James Financial Services Incorporated, member FINRA SIPC. Investment advisory services offered through Raymond James Financial Services Advisors Incorporated. Serving Those Who Serve is not a registered broker-dealer and is independent of Raymond James Financial Services.
Raymond James is not affiliated and does not endorse the opinions or services of any of the quoted professionals or their respective firms. Any opinions are those of Dan Sipe and not necessarily those of RJFS or Raymond James. This case study is for illustrative purposes only. Individual cases will vary. Raymond James is not affiliated with and does not endorse the opinions or services of the quoted professionals or their respective organizations.
Neither Raymond James Financial Services nor any Raymond James financial advisor renders advice on tax issues. These matters should be discussed with the appropriate professional. Investing involves risk, and you may incur a profit or loss regardless of strategy selected, including diversification and asset allocation.